Good morning. My name is Gina Noy of Noy Tax & Associates. After 10 years of working at companies like PwC, Blackstone, and Take-Two, I opened my own tax preparation advisory company. And I helped many of my clients make that transition from employee to entrepreneur. So this is very near and dear to my heart. The key thing is to have the business plan. What's going to make that oodles and oodles of money for you? And after you figure that out, then we can make the tax plan. And that's what I'm going to talk about, is tax tips or questions that you might have regarding taxes. If you're an entrepreneur, you think differently. And you have to start thinking differently about taxes. Taxes are definitely not an exception, but often an afterthought. Estimated taxes. When you are entrepreneur, taxes are no longer a passive activity where you file a tax return, get a fat refund. It is a quarterly event. It is something that is a conscious effort that you have to do. What is a self-employment? It is 15.3% tax. It is Social Security and Medicare. When you're an employer, your company pays half, and half is withheld from your paycheck. When you're self-employed, you pay both halves, and it's a lot. For every $100 of net income that you earn, $35 are in taxes, and $65 is take home. $35, it's a lot. So it's a good idea to start planning early before you start bringing in the revenue, because once the revenue is brought, it's late. One of the most important things is paying your taxes, keeping good records, because IRS is right there waiting for you to audit you or to accrue some interest and penalties. So just keep aware of that. One of the most important decisions you have to make is whether to incorporate. If you're looking to raise capital, attract partners, then maybe LLC, S Corp, or corporation is the right choice. But if you don't have many assets and you want to start working on your own, sole proprietor is a great choice for you. And once you start bringing in the revenue, then you can incorporate. On the left, you have a sole proprietor paying $15,000. On the right, you have an S Corp, a corporation, paying half of that. And that is a very important decision to make. Deduction is going to be your best friend. It's going to lower that tax bill. Some common overlooked deductions are health insurance. A lot of self-employed people just skip that part completely. There's also HSA account that can also lower your bill. I get this question a lot. Can I deduct my travel, my meals and entertainment, because we all go out, we all travel to see our clients. And if it's for business, and if you have good records, by all means, let's take that deduction. A lot of people who are starting out work at places like this, New York City, they also work from home. So if you can dedicate space, especially for your business, then percentage of your rent, your utilities, maybe even home insurance, can be deducted. Hiring family member is a great idea. Once your business is up and running, you might hire somebody and shift income from your business to your family member. Your family member has a way to earn a little bit extra money, and you get a deduction. Retirement plan is a must. Again and again, I meet with people who are starting out. Retirement is not something that even occurs to them, but it's something that you should. When you're an employee, a company might have a 401k plan, they might have it matching. When you're on your own, you have to start thinking about it because you will want to retire. Bookkeeping, yikes. No, nobody likes bookkeeping. I love it, but, but it's a must. How do you have to record that income that's coming in, those expenses that are coming out. Because without bookkeeping, you don't know how to price your goods and services. How do you know what to charge your clients? If you're going to go out, consult, how do you know what to charge? You have to know what your costs are and what your profit margin will be. Also, please keep your business and your personal expenses separately. If IRS comes in and everything is commingled, you're paying your rent with your business card, you're buying a ticket to travel to California to meet a client with your same card, it might pierce that corporate veil. Tax planning is often an afterthought, but again, I cannot stress this enough, it should be ongoing evaluation and taking the pulse of your business. As in our earlier example, for every $100 that you earn, $35 is going to be in taxes. That is a lot. So start thinking about it now and start planning about now. My name is Gina Noy. I love talking about taxes. I love saving money for my clients, and I'll be around at a breakout session. Thank you.